Welcome to Insider Tips to Avoid Foreclosure. I'm Jeff Chin, Mortgage Advisor with Independent Mortgage. I hope this presentation helps you. The first step to understanding what options are available to you is to understand whether there is equity in your property or not. Your equity is the market value of your home less the mortgage amount that you owe to the bank, and the remaining, if a sale should happen, would be the equity that you would receive as a check. The insider tip here is that the market value of your home is usually best judged by an appraiser or a real estate agent that knows your market very well. So they are the best judges of how much your house is worth. Having invested in your home, naturally you would like to stay in there. So the first thing you may want to look at is refinancing. Refinancing today means that you have some equity and you'd be able to qualify for a conventional loan or perhaps an FHA loan. The difference between the two is one that the conventional loans are basically for those that have better credit and that you have more equity, whereas the FHA loans are basically ones that gives you a little bit more leniency, but they are also backed by the government. On the flip side, if you don't have equity, or you're what's called upside down, where your negative equity, your mortgage is higher than the value of your home, you may look at a loan modification. And in that case, you are working directly with your lender to modify the terms of your loan. Now, you do need to qualify this for the new loan with a hardship case, and it's usually worked through an attorney-based company that will negotiate for you if you can't take that on yourself. So that's a loan modification. The insider tip here is in the case of working on a refinance, make sure you work with a good loan officer that has experience and understands the programs that are available for borrowers today. Loan modification companies usually charge a fee up front, and you want to make sure that you do the homework on them first, and they disclose what those fees are to you to do the work. It may be a case where refinancing or a loan modification does not work and selling seems to be the best option for you. Putting your house on sale would mean that you either use a sales agent, which takes a commission, or there's some auction companies that actually do that too, or you can simply list it yourself. They're all valid ways to sell your house, and they're probably the best way to recoup the equity in your property. In cases where you have no equity left, then looking at a short sale may be the best option, and that's gaining permission from the lender to pay off your mortgage with less money than you took out. But in most general terms, you have to arrange to have a buyer in hand. The insider tip here is that you may want to explore the option of renting your home simply to weather out the market until the market improves. If you are short selling, then work with an experienced real estate in your neighborhood. They often work with a lot of buyers, and they kind of know the pulse of what's going on. So they may be able to put you in touch with a buyer that is looking for a good value out there. I hope these tips have helped you understand what options you may have available so that you can avoid foreclosure and having your credit severely wrecked. If you need additional information, please contact me. I'm Jeff Chin at Independent Mortgage. Thanks for